A couple wrote to a columnist on the Market Watch recently asking a question about long-term care. She is 69, he's 65. They've got two pensions, two Social Securities, bring in total about $200,000 a year, and they've saved $1.5 million, which they don't actually touch. They looked at long-term care policies and found they top out at around $360,000. Since they have more than enough of that saved, the question came up. Should they just say, if long-term care happens, we'll just pay for it ourselves? Guys, what are your thoughts on this? And is this a question you guys get asked often?
Yeah, I would say it comes up. If we're not getting asked the question, it's one that we're asking as part of an overall comprehensive review.
Okay.
And I think there isn't one definitive answer, Chris, at least to me, whether or not a wealthy person needs long-term care insurance. I mean, I guess it's all relative, the word wealthy, because I've run some financial planning scenarios where, when we look at an average in-home, or let's say, an in-home sort of care situation where maybe somebody's coming in and just kind of doing a couple things around the house, could range anywhere from $60,000 to assisted living, maybe 65 to 70, and then the full nursing home care anywhere from $100,000 to $110,000. That's in today's dollar. And so when you extrapolate those costs out at a rate of inflation, which is almost double, maybe even triple that of the regular CPI that we look at, you're sometimes looking at, for 1 year in a long-term care facility, soup to nuts, probably close to $200,000, $250,000. And so you really, and then if you look at that, how long you're going to be there, we add maybe 1 or 2 years, maybe even 3 for the individual. And then you have, that's just one spouse. When you add on to that the other spouse, just for long-term care, to really, cover the cost, you're looking at maybe $1 million, maybe even $2 million for each spouse. So to me, that's a lot of money. Even the most wealthy individuals probably still could use a measure of some comfort or some sort of coverage to cover some of these bills. Especially looking at the aging demographic in the United States. We'll just draw the attention back to the baby boomers, where they're affecting, healthcare the way that they affected toys and homes and cars and everything like that. They're coming through this big demographic, and so there's going to be a demand for those services. And at a really high rate of inflation, plus with a high demand, you can see, the costs for long-term care and elder care just growing exponentially in the next, maybe, 10 or 15 years. So that's something that we look at. But yeah, I do think for some folks, there is an opportunity to self-insure a bit. But I would say for most of the people that we talked to, Chris, they're somewhere in the middle. I had a gal that I talked to yesterday that said, you know what, I really don't care. I'm probably just going to live with one of my kids. And I was like, okay, that's a strategy. I've had other people that say, you know what, under no circumstances are we going to burden our children, but we're healthy. We take care of ourselves. We have pretty sufficient assets. Is there something in between? And I know that, through the retirement guys and some of our solutions here, we've got plenty. Nolan, I know you had a case recently that worked out really well. That was, something similar to that.
Yeah, and I guess when I back up maybe a minute and I think about the question, do I need long-term care insurance if I'm wealthy? To me, I think it breaks into kind of two different categories because the phone calls that I'm getting is the one group of people is the people that already have long-term care insurance. I can think of a couple of examples. We'll call them Rob and Sarah, but at age 92 and 91, they already have it. But the premiums keep going up. I would consider both of these, individuals also wealthy. The thing is yes, if they needed a nursing home or long-term care, do they have the financial resources to write checks out? Yes. Even though that is happening, they purchased this long-term care policy that they've had years ago. And at 91 and 92, now's the time where they might need it. So actually keeping their long-term care policy could make a lot of sense. I have some other people that I met with, we'll call them Rick and Mary. They're in their early 70s. So what they did is they saw their parents needing long-term care. They also have had long-term care for quite some time. And they, like most traditional long-term care people, have got those premium notices increased. And so, the wife asked, she said, if I pay this higher premium, is that now set in stone that that's what the premium is. And I said, no, that's traditional long-term care insurance. You have to assume that it's likely to going to be more expensive when they raise the rate again in the future. You've got to build that into your plan. And so in their situation, what it made sense is, they could maybe drop down a little bit of the coverage. So instead of having lifetime benefits, they could reduce the benefits where it covers 3 or 5 years. They can do things like maybe change the inflation factor. There's some choices that they can make. So if you're listening and you're a wealthy individual and you have long-term care insurance, and you're worrying about getting these premium rate increases before you drop it, because that's what they want you to do, right? Before you do that irrevocable decision to get rid of what you already have, please, 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 let's have a second conversation and talk about, does it make sense? Now, let's talk a little bit about solutions if you're a little bit younger or you don't have long-term care insurance today. And again, by younger, I'm still meaning most people that are close to or in retirement time. I still consider that the younger retirees. In this case, what I would say is you should develop some type of solution to develop to protect your assets. One of my favorite solutions is to look to leverage your assets. Look, folks, why pay dollar for healthcare related expenses? There are life insurance policies that you can add a chronic illness rider onto it. I looked at an example here of a healthy young female. She was 61 years old, and instead of putting and converting money over to a Roth IRA for the next 10 years, I showed her an illustration of converting that money into a life leverage plan. Her $50,000 immediately turned into $100,000 for long-term care benefits, day number one, and life insurance benefits. But over the course of the next 10 years could grow to be worth between $750,000 and $950,000 of life and long-term care insurance. So in this situation, if she needs long-term care, she's got some protection for her and her family. If she doesn't, she's got a bigger life insurance benefit. The last one I'll tell you, since I know we're coming up on the end of the show here, is annuities offer chronic illness riders. So again, another younger retiree that we just met with, Ron, in his situation, we took and added some of the benefits of the higher rates that are offered today in annuity products, but also this one had a long-term care, what I call chronic illness benefit with him. So in the event that he needed some type of long-term care 15 or 20 years down the road, he had some extra benefits. So again, even wealthy people need to figure out what is a solution for this high, out-of-control long-term care cost that's out there.
Lots of options out there, from your standard black and white long-term care policy to funding it out of pocket. There's no real right or wrong answer across the board. Well, perhaps the one is to say it won't happen to me. I'm not going to need it, because these days, as people are living longer and longer, the chances of needing some form of assistance have gone up significantly, and you don't want the what ifs to become what nows. Having that conversation with the team at America's Retirement Headquarters, find out what's going to work best for you as it fits into your retirement plan. Is as simple as reaching out. arhq.com. That's the website, always available there. You can also give them a call, 419-794-3030. And we want to thank you, as we always do. Really do appreciate you joining us here on the show. I hope you found it insightful. The next step is, of course, putting pen to paper for your particular circumstances. One last time, 419-794-3030. And as we wrap up, gentlemen, thank you for the time, and want to leave you with the final word.
Yeah, enjoy the last month of the year. Enjoy the holidays and continue to have a great time. Just remember, when you think retirement, think America's Retirement Headquarters. It's home of the Retirement Guys formula and America's Medicare Associates.